Taxpayers generally understand that taxable income starts with adding up your income from various sources: wages, investments, businesses, retirement income, etc. From that income, you subtract your deductible items. Most taxpayers have a big three of itemized deductions: taxes, mortgage interest, and charitable contributions. If those deductions don't exceed a certain threshold amount, then the taxpayer is entitled to a standard deduction against income. To the extent that income exceeds deductions, that amount is subject to income tax. But how is that income taxed? As you'll see in the following slides, it is not terribly complicated. Have you ever looked at the tax brackets? Here are the 2019 individual tax brackets that apply to married taxpayers filing a joint return. Not very user-friendly, huh? Let's take an example. If your taxable income is $270,000, your marginal tax rate is 24%. But what does that actually mean? Who remembers this game? People of a certain age recognize this as the grand prize game. The object of the game, as you can probably guess, is to successfully toss a ball into each bucket in order from 1 to 6. You don't proceed to bucket number 2 until you have successfully rung bucket number 1. If you think of your tax brackets as buckets, you pay tax in much the same way. If you have taxable income of $270,000, you fill up the 10% bracket before proceeding to the 12% bracket, then the 22% bracket, and so on. You work your way through each bracket until you've calculated tax on all of your taxable income. Let's see how that works. Using our same $270,000 taxable income example, here's how we calculate the tax. The first $19,400 in taxable income is assessed at a 10% rate. Since you have more than $19,400 in taxable income, we proceed to the next bracket, where the next block of income is taxed at 12%. The next bracket is a pretty sizable leap from 12% to 22%. Our last block of income in this example is taxed at 24%. The sum of the tax calculated in each bracket in this example is $53,149. Let's return to the tax brackets for a moment. Our marginal tax rate is 24%, but that rate only applies to $101,600 of the $270,000 total of taxable income. We calculated most of the tax at rates lower than 24%. So what is the key takeaway? Mainly that there are two tax rates that have unique significance to you: the marginal tax rate and the effective tax rate. Let's address the marginal rates first. Your marginal rate is the rate at which your last dollar of income is taxed. Said another way, it is your highest tax rate. Why is this significant? Using our previous example, let's assume the taxpayer is considering a one-time charitable contribution of $20,000. Remember, our taxpayer's last $100,000 was taxed at 24%. So additional deductions offset this income first. What is the tax benefit of that contribution? $20,000 times 24%, or $4,800. What about effective tax rates? Your effective tax rate is your total tax divided by your taxable income. You'll sometimes hear it called your average tax rate. Your effective tax rate is a nice shortcut for you to figure out what your tax liability is going to be in the current year. Let's say our taxpayer expects to have taxable income of $320,000 next year. Applying the average tax rate of 19.7% to that income yields an estimated tax liability of $63,000. As I mentioned in my Session 1 presentation, using an average tax rate is not perfect, but what it sacrifices in perfection, it gives us the benefit of being reasonably accurate without requiring us to spend a significant time investment. Having a general understanding of these two rates will help you greatly, especially this time of year when you're thinking about year-end tax planning. Thank you for tuning in. I'm hopeful that this short presentation has given you what you need to proceed with confidence when undertaking your next session of tax planning. If you have any comments about this presentation or suggestions on upcoming topics, please email me or message me in LinkedIn. Also, I encourage you to subscribe to my YouTube channel and recommend others subscribe as well.